Hi traders. This video is regarding the channel breakout strategy that the team of TradingView coded and can be found with the same name under the indicators, then technicals, and then strategies. In this video, we will apply the strategy to forex pairs. I selected my favorite pair set, which is the one with the JPY in it. We're talking about the USD, the GBP, the Euro, the AUD, the CAD, the NZD, and the CHF. All in a beautiful relationship with JPY. As a bonus, I also added GBP USD because it may be interesting to some of you due to its popularity. If someone asks you what is just one thing that you seek from a trading strategy, what would you reply? Let me go first. I would say profitable consistency. That is the most important factor for me regarding any strategy. I can throw a martingale and everyone could see only profits for some time, but later on, they will see the profits evaporate like alcohol out in the sun. When you go to a broker, you may notice, as they're obliged by the law, to report the percentage of traders that lost their money and busted their portfolio. Do you think that these traders started and lost from the first time and then left? The worst scenario and the most popular is to win several times and raise the protection stops or mess with the risk management. If you think you found the loophole to trick the system, then the system slaps you straight in the face. I hope you don't be offended by the metaphor, but retail traders are like mice. The mice that will try to eat the whole piece of cheese will be killed from the trap. The one that takes small bites and is able not to move the spring of the trap will have his stomach okay and survive. The stomach of the second mouse maybe is not full, but the mice survived another day to let the opportunities arise. Maybe someone forgets the door of the fridge, maybe a hot dog fell on the road. Don't you like the mice metaphor? Did you see RoboCop's movie? If you did, then make your prime command: don't bust the trading balance, protect the innocent, and preserve the law. I guess nobody stayed up to this point to hear the rest of the video, but for those who did, let's go. The first pair is USD/JPY with a 1.22 profit factor and 2,805 closed trades using, as always, deep history mode of TradingView. Check the equity curve. Is it a beauty? Nice mountain climbing. Make sure you have a sleeping bag for the top. The second pair is one of my favorite. GBPJPY with a 1.274 profit factor and 1597 closed trades. The equity curve is not so beautiful as the previous one, but certainly profitable. Is like having a pump wait for a while and then another pump and so on. EUR/JPY is the next one. Interesting data, enough closed trades to have a statistical insight. This is a rocky mountain, not for novice climbers. Moving on to CAD/JPY. Until around the first 100 trades, we saw a losing pattern, and then the engines is on, and away we go. The closed trades are many and give us a glimpse of the future. If nothing else, mess with it. I don't mention the settings for each pair because I have a table for all of them at the end. Now the CHF/JPY. This one is messy. For the mountain climbers, aka traders that didn't die at the end of the cliff you see after 400 trades, then the mountain met heavy dense clouds, aka drawdown after 800 trade. I think climbers can't breathe there. My suggestion is to choose another mountain, aka pair. AUD/JPY. Another nice pair. 8686 net profit, 2,725 closed trades, 1.176 profit factor, and good drawdown. The equity curve looks smooth after the 500 trade. Last I have the mountain, aka pair that no man has gone before, as Star Trek said. This is not a pair but a killing machine. Barely profitable with an equity curve that is a suicide mission. Let's pop the surprise pair. Welcome to the guest in this video. The GBP USD. This pair has a low channel setting that allows it to have more trades. We're happy about this because the more trades the better, especially when we see it's totally profitable. $8,536 net profit, the enormous amount of 6,960 closed trades, and a 1.158 profit factor make this pair a hit. I don't say anything about the equity curve. It's more beautiful than a model on the catwalk. If you also consider that it's popular pair, then the results can surprise you. Do realize that popular pairs do tend to bring many not so innocent types of investors. If a strategy manages to nail a positive profit factor, for me can be characterized not only as good but tricky too. Let's go to the summary table. I didn't sort it at all. Just fill the data one by one. At the channel breakout setting column, you see the value you need to fill to get the results I presented to you, having of course the deep history feature on. The time you will see the video may be way after I post it, so some data may not be identical. From the JPY pairs, the winner for me is the CAD JPY because the setting of 17 is lower and is able to catch more trades, but even so, I would choose USD JPY because I do trade it and because it has the lowest drawdown of them all. As for the GBP USD, what I can say, ladies and gentlemen, GBP USD left the building, as they said, for the king. Don't wonder who's the king. There is only one king, Elvis Presley. If you have anything to say or suggestions for the current strategies or strategies you want to test, do let me know in the comments. Remember, finding an edge to your trading and applying proper risk management and psychology is the recipe for success. Thanks for your time. Sincerely, the trading elephant himself.